Good afternoon, everyone, and welcome to Stock Market Today. It's Ollie, Coram, and Justin Nielsen here with a breakdown of the action in today's session, Monday, July 1st, where we saw the NASDAQ and S&P 500 hold firm after Friday's downside reversal. Justin, what do you have for us today?
Yeah, so it's a new quarter, new half of the year. So we'll take
Yeah.
a look at a few stocks that were holding up pretty nicely. So Meta and a lot of the large cap companies were looking pretty good. And I do have a position in Meta. Ollie's holding tight after its earnings report not too long ago. And then we'll go ahead and end with Synopsys, one of the IBD long-term leaders.
All right, you'll give us the synopsis on Synopsys. I like it. All right, well, we'll get to those talks, but first, let's take a look at the major indexes. The NASDAQ today up 0.8% by sessions close. The S&P 500 up almost 0.3% on the day. The Dow also closing in the green, up 0.1%. On the downside, though, small caps were weak, with the Russell 2000 down about 0.8%. So after a downside reversal, not only off highs, but also at a key level for the NASDAQ and the S&P 500. Is it impressive to see the indexes hold firm here, Justin, or is it too early to tell?
It is too early to tell, and we have our line in the sand, right? The Friday's high is kind of, look, if we can get above that, close above that, stay above that, that would kind of suggest a lot more strength. And it's happened before. You just have to go back to May, and you see that nice little downside reversal that we had. You expected more weakness. It followed up with an inside day, and then the next day, right back into high territory. So that could be in the cards for us. We'll see. But I will note that one of the things that you have to kind of recognize here is that, look, as has been the case for a while here, the mega caps, the $1 trillion club members were doing a lot of the heavy lifting. You know, you take a look at QQEW, not necessarily as strong, right? It was down for the day as opposed to a really strong close for QQQ. And RSP, that wasn't looking great either. You know, the S&P 500 equal weighted ETF was kind of losing an area of support, that 162, 68, 69. I mean, it's coming right back down there. So if it doesn't get support here, it could be look out below.
Right. I mean, that's the lowest close for this ETF in quite a while, Justin, after trading sideways. So, so go the mega caps, also goes the market, it seems, still at this point, especially for that NASDAQ. So what does that mean for traders, do you think?
Well, this is where you have to be very careful, because if you were of the mindset, okay, look, I'm gonna start doing some shorting, I'm gonna do some hedging. We talked about this on IBD Live. You have to be very careful of the instrument that you pick. And so if you've got a pretty broad portfolio, you are probably taking it on the chin a little bit today. Now, if you hedged with an index ETF, an inverse index ETF, those were up. So you could have been getting hit on both sides. And that was something that you brought up today, Allie, as well. So this is the kind of struggle sometimes. Now, a lot of the mega caps were looking better as opposed to the bulk of stocks out there, but there were these pockets of strength. So if you're going to be playing, you have to be, I mean, for us, we go where the strength is, right? And that's where charts can really help you, whether it's the price action itself or those relative strength lines that really kind of help tell you where you need to be. Those are the elements that we're really looking at right now.
Right. And taking a step back, we are still in a power trend, and
Yes.
a pullback to the 21-day line definitely would not be abnormal, right, Justin?
Absolutely. And so again, you have to remember that power trend kind of environment that we're in. Yes, the downside reversal isn't a great look, but it doesn't necessarily mean that it's all over. A lot of times you can have temporary weakness. And look, we've seen this a few times before, right? Where you had these downside reversals and yeah, you had some temporary weakness, maybe even a correction that's a little bit more than the 21-day moving average line.
Right.
But not necessarily that the uptrend is completely over. So as you mentioned, power trend still intact. We're still above the 21-day moving average line. You look at the indexes, not much to really fret about, but you do have to be keeping in mind what's going on with your individual stocks, what's going on
Right.
with your portfolio.
Yeah, and potentially a lot of cross currents
Yes.
underneath the surface. And something that we've been saying for the last couple of weeks is, some more sideways action would be nice. Get those
Mhm.
moving averages to catch up a little bit, because some of the precedents that we've looked at, as you mentioned, that 21-day line may or may not hold. So if we, eventually get some sort of pullback to the 50-day line, well, as of now, we're kind of a ways away from that 50
Yeah.
days. So would be good to see those levels catch up. But as always, we're going to take things day by day. Let's quickly take a
You know,
go
what I was
ahead.
going to say, one of the hardest things is that, a lot of times we say these things like, oh, some sideways action here would be nice. A pullback here would be nice, but it never feels good when it happens, right?
Right.
You get down to the 21-day moving average line, or even, down to the 50-day moving average line. You're like, oh, I just took such a hit. It's really hard for you to kind of get into that buying mood again. But this is where, as much as we're talking about the downside of reversal of Friday today, don't forget there's also upside reversals, and those
Mhm.
can be kind of nice to look at as well.
Yes. Okay. Well, we'll be ready for anything as always. And just really quickly before we move on, want to take a look at the S&P 500, because it too got a downside reversal right at that key level, psychological level, I guess you could say, of
Mhm.
5,500. The Nasdaq hit 18,000. So this one is more or less, even though it did have that downside reversal Friday, for now is at least on a closing basis, trading in a pretty tight fashion.
Yeah, and so again, that's a good look. We're going to talk about that a little bit with Ollie's as well, but we really like that tight action. But however, you do look at that RSP, and as we noted, there is some weakness there overall.
Mhm.
S&P 500, look, it's not just NYSE companies anymore. New York Stock Exchange, it's got a lot of those Nasdaq heavy hitters, a lot of tech exposure. So those are definitely holding sway there as well. And you got more stocks that are down today than up. I was looking at the advancers versus decliners, and for the NYSE, it was 1900 versus 955 on the upside.
Mm.
So that's a pretty big,
More than 2 to
gap
1,
between
yeah.
the ratios. It was 2,600 decliners on the Nasdaq versus 1,576 advancers. So, there was some damage done here. Now, that doesn't mean you have to do a lot of selling, but it does mean you might have to do some adjusting.
Right. And for a more detailed analysis of how this current market compares with 2003, 2009, this morning we talked about that on IEBD Live. So for those who have access to that, you can check out that recording. We also are going to get some thoughts from hedge fund manager Jim Ropel live at 5 on our monthly market report, summarizing his take on the month of June, how that went. And now we're turning the corner. As you said, now we're in the second half of the year. What are the thoughts, the expectations there? That'll be live on YouTube at 5 monthly market report. And you and Webby, you're going to be tackling things from a swing trader perspective in tomorrow's swing trader status update video. So everyone should stay tuned for that. Looking forward to it.
And it's a
Uh,
double header because he's going to be on the podcast this week as well.
yeah. Lots of good stuff. Lots of good stuff. Okay. Anything else on the market before we talk about sector ETFs, Justin?
Let's get into some sectors.
Let's do it. So XLK, this is the tech sector ETF, a nice upside reversal today. Basically, performing in line with the Nasdaq Composite, up 0.8% by the end of the day.
And of course, you've got some heavy hitters in there that are, really kind of helping that,
Yeah.
look stronger. So, Microsoft is a big one there. If you just take a quick look at that, I mean, that's looking strong still. Nothing wrong there with it going up 2%. And what's the other one? Is it Apple that is also
I think it's
this
Apple.
one? Yeah, Apple
Yeah.
also looking very strong. Nothing looking odd about this chart. This one was up almost 3%. Hasn't even come down to the 21-day moving average line. Still holding well above that 200 breakout.
Yeah, we've got Apple, CrowdStrike, Broadcom, Microsoft, ANET, Corvo, Oracle, GoDaddy, IBM, and NetApp all up, 1 to 2% today
Yeah.
in XLK.
Mhm.
Okay, next on the list, we wanted to take a look at XLY. This is the consumer discretionary ETF, up 0.4%, Justin.
And you have to give credit to our old friend Tesla getting
Yep.
back above its 200-day moving average line here. But look, Tesla's been weak for a while, so I could understand maybe not wanting to focus so much on that. But in the XLY space, you also have Amazon, and
Yep.
Amazon isn't doing anything wrong here. It's just approaching that 200 level after a breakout, last week. And as much as Friday didn't look great for Amazon, it's kind of nice to see how much it recovered today. And again, pullbacks are very normal after
Mm-hmm.
breakouts.
Mm-hmm.
We talked about this on IBD Live as well. Bill would mention 40% of the stocks you could expect to pull back. Later on, outside of the book, our founder Bill O'Neill used to say, "Hey, I think that number might be higher to 50%," and that was something that Mike Webster confirmed with some of the studies that he did. So, pullbacks aren't unusual, but Amazon is looking like it's really trying to still, have that breakout stay intact and maybe make some progress.
Right. Let's also take a look at XLF. This is the financial sector spider ETF, up just 0.2% by the close. But if you look underneath the surface, some really notable financial movers in today's session. JP Morgan, which we mentioned on the show on Friday, was up 1.6% today. So was Discover Financial Services. I know we've got that acquisition thing happening with that one, though. Goldman Sachs leading XLF today, up 2.5%. Morgan Stanley and Wells Fargo also with 2% gains today.
Yeah, so plenty to look at there, and I love the fact that you guys mentioned J.P. Morgan on the show on Friday. I do have a position in that, and part of that was because I watched the show on Friday and kind of put that back on my radar. It was also the stock of the day today, so if you want a little bit of extra information on that stock, Aparna did a really great article that's worth a read.
Mm-hmm. Yep. And you can find it right there if you are in Market Surge. Okay. And one more thing to talk about while we're talking about financials, Justin, let's just briefly pull up TBT.
Yeah.
This is an ETF that moves with the yields.
Mhm.
So talk to me about what we're seeing here, because it's really coming on
Yeah.
lately, between Friday and today.
Yeah, between Friday and today. But remember, overall, this has been in kind of a little bit of a downtrend.
Yeah.
So it's been a little tricky here. The 10-year yield is important, and when the yield is up, it does kind of put a damper on those small caps, which we did see today.
Right.
And the mega caps are a little bit less affected. Look, when you've got cash flow like those big mega caps do, you don't have to worry so much about your borrowing costs. So that is definitely one of those, as you mentioned, a lot of cross currents here. That's definitely one. I mean, we're not even going to get into the political side of European elections, the debate last week, PCE numbers on the economic side. There, as you mentioned, there's a lot of cross currents going back and forth here. So this is just one of those things that it's worth watching, and it's important that this is potentially breaking this downtrend, because that could put a little bit of a damper on some of the some of the stocks in the indexes.
Just something to note. Yeah. All right. Let's take a look at Meta. And we got some support here right at the 21-day line and that round number of 500, Justin.
Yeah. So again, you would expect the downside reversal to cause a little bit more weakness, but it was really we've already kind of run the gambit. I mean, we've looked at Amazon, we've looked at Microsoft, Apple, Tesla. I don't know, did we miss anyone?
Google and
Alphabet.
Nvidia.
Yeah, we
Yeah.
missed Alphabet. And look, that one's looking fine too. So look, all of these stocks
Mhm.
are looking pretty good. Nvidia even got a support at its 21-day moving average line. So these are looking pretty good. Meta, it a bit weaker because the breakout technically has kind of come in a little bit, and you're below that breakout point, but you haven't come down to a stop loss period, right? You haven't hit like a 7% stop loss. Now, it's completely reasonable to take some off the table on this one if you just bought it recently, especially given what we saw on Friday. But kind of like what you saw on Monty Python, the Holy Grail. I'm not dead yet, is what here is saying.
Yeah. Okay. I know. I feel like it's so tricky because they have had periods where they do outperform very easily, but then there are other periods where it's almost that sneaky outperformance where you have to be more patient with them. It's not always just clear cut, you
Yeah.
know. They test your patience. They
Well,
definitely can.
and that kind of makes sense. If we're expecting some sideways action, that is
Mhm.
a lot more difficult to navigate than just a straight up trend where everything is going, all the, the wind is pushing you even further. It gets a little bit trickier to sail through and navigate.
Yeah. Very well said. Okay, next on the list, let's take a look at that tight action that you mentioned for Ollie's bargain outlet. I checked this out when you mentioned it was going to be one of the ones you wanted to talk about on the show today, and yeah, that really stands out. That tight action. We had that pop on earnings, and now it's just holding nice and tight right below the 100 level.
Yeah, and if you just kind of take a look at this on the weekly chart, you see how it had a nice run up, very, very nice pop after that earnings report, and it is just holding right at the top of that range. And we have that kind of green shaded area. That's the 20% profit level from the most recent breakout, and it's right there, right under 100, and you could easily see this popping out of there. I mean, it's I don't want to call it a 3 weeks tight yet because it's Monday, but it has that look, right? So
Well,
it's well,
short stroke in spirit.
yeah. I mean, it's got that it's got that kind of look, right? And again, tight action is so important to us because a lot of times it's that kind of rest that stocks need before they really kind of make their next push. So I really like the look of this and the action. This is something that David Ryan has brought up a number of times. He made a good call on this. From its IPO, a really strong move on this, and this one hasn't completely dropped off his radar. He hasn't necessarily stayed invested in it, but it's one that stayed on his radar, and I think there's good reason right now.
Yeah, absolutely. Okay, so if this does cross 100, what do you do, Justin?
Well, here's where you have to do some hard decisions, right? You're going to have to look at what's going on with the market, not just the
Mhm.
indexes, but some of those equal weighted indexes to kind of get a sense of what's happening, but also your portfolio. It's really important to kind of see where are you at. If you did any hedging, you might be saying, okay, did I hedge with the right instruments? If you used individual option puts, for example, yeah, you're going to be hedging the instrument itself, and so that's pretty easy to do. If you're using sector ETFs, market index ETFs, inverse ETFs, any of those things, it's going to be a little bit trickier. So you just have to see, hey, if I put a hedge on, is it doing what I wanted it to do? That's one thing. And then on the other side, sometimes you're selling stocks because you have sell signals going on with them. And if you've got any type of hedge or even the selling itself, that's raising cash, which is kind of its own hedge. You might find yourself maybe going too far one way. And so it's always good to have kind of the next batch of names ready at your disposal, the watch list all refreshed, so that if you do need to kind of increase exposure, you've got a host of stocks to look at.
All right. And, so if this is maybe an add-on point for those who were buying the breakout or an aggressive entry, it seems like there's a pretty clear area where you would set a stop.
Yeah, exactly. I mean, and you're not risking much there, right? It crosses 100, you've got your trigger. It crosses below that line that you drew, and hey, you know that it might need a little bit more time. Not necessarily that it's broken, but that it just might need a little bit more time. I mean, right now, is that your 10-day moving average line, or is that an 8?
That's a 10.
That's a 10. So a 10-day moving average line, and it's holding above that. That's really remarkable. So again, I think you have a really kind of low risk entry here. You can wait for it to cross 100, and I think that you're not going to be risking too much.
Okay. And last but not least, let's take a look at long-term leader Synopsys, S&PS, an upside reversal at the 21-day line, closing above that round number of 600. I'm just going to start out with the monthly chart here, Justin, look at that long-term price outperformance versus the S&P 500. So this is in a kind of a special category, you could say, as
Yeah.
a long-term leader. So something to be aware of with this one in terms of strategies for buying stocks like this, because if you look at the monthly, it's like that tortoise and the hare thing we always
Yeah.
say with these long-term leaders. You take that step back and that strength is there, but on a day-to-day basis, these things aren't necessarily going to be screamers, and this has really just kept pace with the S&P 500 for the last number of months here, pretty much all year long.
Yeah. So lately, that is what it's been doing. But let's go back to the monthly real quick, because one of the things that does distinguish long-term leaders is the fact that their relative strength lines do stay in uptrends. So again, you take that long-term perspective and look, there's plenty of stocks that have these nice uptrends, but when you look at the relative strength line, you're like, oh, this is basically keeping in line with the S&P 500, or sometimes even worse, it lags it. That's the situation we don't want to be in, where you've got something that is in an uptrend, but it doesn't outperform the S&P 500. Why take on the single stock risk? But with something like this, where you do have a relative strength line that does stay in an uptrend, that's a different story. Now, if we go to the weekly chart, one of the other elements of long-term leaders that is, a big thing that sticks out is that they typically have strong growth rates. This is an EPS growth rate of 25%. Can you imagine if you were growing your income 25% each year? And that's what this company is doing. And it's been doing it for 3 to 5 years or more each year, on average. The earning stability is the other component. A low number here is better. It means that you've got an earning stability over time. If you look at all of the different earnings and you draw a line through them, they're not all over the place, and even looking at the earnings line itself, you can kind of see a nice move here, as opposed to some of the more volatile names, where if you look at, like, I don't know, let's say an Nvidia, for instance, the earnings line on that has,
Lately it's good, but
yeah, exactly. There's more
I don't know.
movement
What about
there.
like
Yeah.
Haaland? Oh, okay, that was turning
Well,
around too. We
uh-huh.
only look at good stocks, so we can only think of good
Well,
ones.
but remember, okay, right now we're looking at a weekly chart, but we're talking about the earning stability being over
Over
years,
long periods. Yeah.
3 to 5 years. And so, yes, Palantir has been
Yeah,
showing,
I'll zoom out.
some great stuff here recently, but it's that long-term look that we're really, going after.
Mhm.
So, yeah, Synopsys has it. It's GroupMate Cadence. I do have a position in Cadence. And by the way, Cadence was also featured in the long-term leaders article that was written not too long ago by our very own Hatman. So these are both stocks that are looking, like they're setting up.
Mhm. And now that I've zoomed out, let's compare
Yeah.
the slope of this long-term steady earnings line, since March of 2017 with something like an Nvidia. For as strong as it is lately, you can see that it's just that stability,
Yeah.
emphasis, earning stability, emphasis on the stability, just that slow and steady line. It just isn't the same.
Yeah,
So.
exactly. It's just, yeah, as you mentioned, there's just a lot more deviations, right? That's exactly what it's measuring. How much do you deviate from that line that you draw? The least squares fit curve, for those of you that remember your statistics. But yeah, this is a good looking chart. It's a lot of times we don't necessarily want to wait for the breakouts on these. We do prefer
Right.
pullbacks, and that's what we're looking at right now for Synopsys. But we've got the strength coming in, support at the 21-day moving average line, and it's right there at a round number of 600.
Okay. And it's also just shy of 6% above the 50-day. Let's see, probably even closer to the 10-week. Yeah, 4.2% above the 10-week. So even though, say if you're buying off a reversal on the 21-day, just due to the nature of it being a long-term leader, and if you're buying it as a long-term leader, would you use the 10-week as your stop, Justin?
Yeah, and again, what my goal is for long-term leaders is to get cushion. So when
Absolutely.
it first starts out, I look, if it goes down 7%, 8%, I'm going to be selling it, and that's why we do prefer the pullbacks, because there's a lot of mean reversion with the long-term leaders. But once you have that cushion, then you can kind of let it wiggle and wobble a little bit. Then you can maybe say, okay, I'm going to use the 40-week moving average line for this long-term leader. Give it a little bit more room. It's not comfortable necessarily, because you are going to take some drawdowns if you're going to hold something for a long term. That's just, you can't have your cake and eat it too, that often. So, this last correction in Synopsys, I mean, that was 19%. That's not going to feel good, but it also wasn't doing anything wrong. It, the relative strength is a little bit weak on the weekly side, but on the monthly side, it was still kind of holding very strong. We usually give things room as long as they've got that relative strength overall in an uptrend above their moving average lines. Once it starts crossing a moving average line for 2 months, we're looking at that monthly chart. 2 months, trying to wait until the end of the month. But again, that's once you have cushion that you can handle it differently.
Well, a lot of learning lessons in today's show. So we appreciate it, Justin. And thanks everyone for tuning in once again. Make sure to catch Jim Ropel and I live at 5 today back on YouTube to talk about his outlook for July and a recap of what he saw in the market in June. That's our monthly market report show. And you can catch Justin and Mike Webster on tomorrow's Swing Trader status update. So lots of ways to learn and get trade ideas and feedback on the market and analysis with IBD. So looking forward to all of that. And that doesn't even include the podcast coming up on Wednesday, which you mentioned. So the fun continues. Thanks so much, Justin. And thanks everyone for watching. We'll see you back here tomorrow.